Okay, let's dive into something really interesting today. We're doing a deep dive, focusing on the August 6th, 2025 pre-market stock report.
Right.
And our mission for you is pretty straightforward. Cut through all the noise, give you a real shortcut to understanding what's actually driving today's market moves, getting beyond the headlines.
Yeah.
As we kick off, the general market sentiment, well, it's pointing towards a modestly higher open. Seems to signal what a lot of people are calling the sustained risk-on appetite from investors.
Yeah, like folks are feeling bolder.
Exactly. More willing to maybe put money into things with higher potential returns, not just playing it super safe. But is that the full story?
Well, that's a great place to start because it really highlights a crucial shift we're seeing. The market sentiment seems to have swung pretty decisively towards focusing squarely on corporate fundamentals.
Okay, so less broad vibes, more specific company details.
Precisely. It's not just about the headline numbers anymore. It's digging into the nitty-gritty, how are companies actually performing? And today is, well, it's a pretty pivotal moment in this second quarter earnings season.
Right, earnings are key now.
Definitely. We've already had some really influential companies report pre-market. Think about the Walt Disney Company, Uber Technologies. They've given us some initial and honestly really crucial insights.
So what are they telling us? Like Disney, for instance.
Well, Disney gives us a window into entertainment spending, how resilient that is, maybe how consumers are prioritizing experiences. And then Uber, that's offering a real-time pulse check on, discretionary mobility delivery habits.
Sort of the health of the gig economy from the ground up.
Exactly. These early results, they're kind of foundational for understanding the bigger economic picture right now.
That focus on fundamentals you mentioned, it's really driving a fascinating dynamic, isn't it? It's shaping up to be what we're calling a stock picker's market.
Yeah, almost like a great bifurcation in how stocks are behaving.
Right. And this doesn't feel like just a fleeting trend. It seems like it's fundamentally reshaping how investors maybe need to approach things.
Yeah, absolutely.
It means the market's being incredibly meticulous, rewarding those clear, forward-looking growth stories, sometimes with huge gains. But on the other side, it's punishing any weaknesses pretty hard, even in companies that might look strong otherwise. Capital's flowing very discerningly.
Couldn't agree more.
Yeah.
The market is making incredibly sharp distinctions. Take Palantir Technologies, PLTR. We're seeing them surge pre-market.
And that's not just hype.
No, not just speculative hype. It seems tied to their AI platform, seeing real, concrete, escalating demand. Both government and commercial sectors are buying in.
Okay.
And that seems to be translating directly into strong projected revenue. The market loves that clear growth narrative. Their innovation is paying off.
Okay, so that's the reward side of the bifurcation. But then you mentioned punishment too. Let's talk about the flip side, like Vertex Pharmaceuticals, VRTX. They actually had strong financial results, which you'd normally think is good news. But the stock's down significantly because of a setback in their drug pipeline. Why is that one detail hitting them so hard? What's that tell us?
It tells us, well, everything about how forward-looking this market currently is. For a pharma company, the pipeline is the future. It really is.
The future earnings potential.
Exactly. So a setback there, even if the current numbers look solid, it's seen as a direct hit to future growth, long-term earnings. Investors are basically saying, look, we're not just buying what you did, we're buying what you will do.
Wow. Okay, so past performance isn't enough if the future looks cloudy?
Precisely. It's a very clear signal. Future innovation, growth prospects, that's what's being valued most. Similar story, different sector, with Zenvia Inc., ZENV. Their stock is dropping because of deteriorating gross margins.
Oh, profitability pressure.
Yeah, pressure on their core business profitability. Makes their growth story less attractive, even if the top-line revenue looks okay. It's that deeper fundamental dive investors are making now.
That's a really powerful point about this split, this bifurcation within the stock market itself. But what happens when we zoom out a bit? Look beyond individual stocks to the broader market signals. Because, well, while stocks seem somewhat optimistic, discerning but optimistic, we're seeing what looks like a distinct yellow warning light from the credit markets.
You've absolutely nailed a critical divergence there. While the equity market signals optimism, you look at the VIX, the volatility index.
Your fear gauge.
Yeah, the market's fear gauge, exactly. It's
Yeah.
pretty subdued. Futures are up. But there's a different story brewing just beneath the surface. We saw the largest single-day spike in corporate high-yield bond spreads just recently, since back in April.
Okay, break that down slightly. High-yield bond spreads spiking. What does that mean in simple terms?
Sure. So high-yield bonds, sometimes called junk bonds, they're issued by companies with, let's say, shakier credit ratings. The spread is basically the extra interest those companies have to pay compared to super safe government bonds.
The risk premium.
Exactly, the risk premium. So a spike in that spread means lenders are demanding significantly more compensation to take on that risk. It's a sign of growing caution, growing concern about the financial health of those riskier borrowers.
Okay, so let me get this straight. On one hand, we've got the stock market showing this risk-on mood, maybe picky, but still broadly optimistic. And on the other hand, the credit market, which people often see as the more sober indicator.
Often, yeah.
It's flashing a warning sign about underlying corporate health, maybe potential stress down the road.
That's the puzzle, precisely. Which brings us to a really important question for you listening in. What does this market's really discerning nature actually mean for your understanding, for your decisions? Especially when you have different indicators like optimistic equities and cautious credit markets seeming to tell, well, quite different stories about the underlying economic health and where things might be headed.
A compelling puzzle indeed.
It really is. And navigating it requires, a deep and nuanced view.